Welcome to UXL, where you can learn new skills anytime and anywhere. Visit uxl.com to explore our full course selection. This lesson is part of a larger course. Check the video description below for a link to the full course where you can enroll. If you enjoy our content, please like and subscribe. For your convenience, the course cover displayed on your screen provides the complete course title and lesson title. Let's proceed with the lesson. Lesson: Gross Domestic Product. Gross domestic product is one of the most essential and frequently cited economic indicators in assessing the health of an economy. It represents the total monetary value of all goods and services produced within a country's borders over a specific time period, usually a year or a quarter. The importance of GDP lies in its ability to provide a broad measure of overall economic activity and to serve as a key indicator of economic performance. GDP is calculated using three primary approaches: the production approach, the income approach, and the expenditure approach. Each method offers a different perspective on the economy, but they all aim to quantify the same economic activity. The production approach sums the value added at each stage of production. The income approach adds up the incomes earned by households and businesses, and the expenditure approach totals the spending on final goods and services. The expenditure approach is the most commonly used and breaks down GDP into four major components: consumption, investment, government spending, and net exports. Consumption, which usually accounts for the largest portion of GDP, includes all private expenditures by households on goods and services. This component is crucial because it reflects the purchasing power and spending habits of consumers, which in turn drive demand for products and services. Investment, the second component, consists of spending on capital goods that will be used for future production. This includes business investments in equipment and structures, residential construction, and changes in inventory levels. Government spending covers expenditures on goods and services that the government consumes for providing public services or invests in infrastructure projects. Net exports measure the difference between what a country exports and what it imports, reflecting the balance of trade. Together, these components offer a comprehensive picture of economic activity. GDP can be expressed in nominal or real terms. Nominal GDP measures the value of all finished goods and services produced within a country's borders using current prices during the time of measurement. However, nominal GDP can be misleading because it does not account for changes in price levels or inflation. Real GDP adjusts for inflation and provides a more accurate representation of an economy's size and how it's growing over time by valuing goods and services at constant prices. This adjustment allows analysts to compare economic output from one period to another without the distorting effects of price changes. The rate of GDP growth is a critical indicator of economic health. A growing GDP signifies an expanding economy, which typically correlates with higher employment levels, increased business investment, and improved standards of living. Conversely, a declining GDP can indicate economic troubles, such as a recession. The National Bureau of Economic Research defines a recession as a significant decline in economic activity spread across the economy, lasting more than a few months, and visible in real GDP, real income, employment, industrial production, and wholesale retail sales. GDP data is collected and reported by national statistical agencies. In the United States, the Bureau of Economic Analysis is responsible for compiling and publishing GDP data. This data is released quarterly and is often subject to revisions as more complete information becomes available. These revisions can sometimes be substantial and can significantly alter previously reported growth rates. One of the primary uses of GDP is in the formulation and evaluation of economic policy. Policymakers, including central banks and government officials, rely on GDP data to make informed decisions about monetary and fiscal policies. For instance, central banks, such as the Federal Reserve in the United States, monitor GDP growth rates to gauge the economy's performance and to decide on interest rate adjustments. Lowering interest rates can stimulate economic activity by making borrowing cheaper, while raising rates can help cool an overheated economy and control inflation. Similarly, governments use GDP data to design fiscal policies aimed at influencing economic growth. During periods of economic downturn, a government might implement expansionary fiscal policies, such as increased public spending or tax cuts, to boost aggregate demand. Conversely, during periods of rapid economic growth that might lead to inflation, contractionary fiscal policies, such as reduced public spending or increased taxes, might be employed to stabilize the economy. While GDP is a valuable indicator, it is not without limitations. One significant limitation is that GDP does not account for the distribution of income among residents of a country. A rising GDP might suggest economic growth, but it does not indicate whether the benefits of growth are being equitably shared. This limitation means that GDP can sometimes paint an overly positive picture of an economy, ignoring issues of inequality and poverty. Additionally, GDP does not consider non-market transactions, such as household labor and volunteer work, which contribute to societal well-being. It also overlooks the informal economy and black market activities, which can be substantial in some countries. Moreover, GDP does not account for the depletion of natural resources or environmental degradation, which can have long-term negative impacts on economic sustainability and quality of life. To address some of these limitations, economists and policymakers sometimes turn to alternative measures of economic performance and well-being. One such measure is the Human Development Index, which combines data on life expectancy, education, and per capita income to provide a broader assessment of human progress. Another alternative is the Genuine Progress Indicator, which adjusts GDP by considering factors such as income distribution, environmental costs, and the value of household and volunteer work. Despite its limitations, GDP remains a cornerstone of economic analysis due to its ability to provide a broad snapshot of economic activity and performance. Its comprehensive nature and the relative ease of its calculation make it an indispensable tool for economists, policymakers, and business leaders. By understanding GDP and how it is measured, one gains valuable insights into the dynamics of an economy and the factors that drive growth and development. In conclusion, gross domestic product is a critical measure of economic performance that encapsulates the value of all goods and services produced within a country's borders. It is calculated using the production, income, and expenditure approaches, with the latter being the most commonly utilized. GDP can be expressed in nominal or real terms, with real GDP providing a more accurate depiction of economic growth by adjusting for inflation. GDP growth rates are essential indicators of economic health, influencing monetary and fiscal policies. While GDP has its limitations, such as not accounting for income distribution or environmental sustainability, it remains a fundamental tool for economic analysis and policy formulation. Understanding GDP is crucial for comprehending the broader economic landscape and making informed decisions that impact economic growth and societal well-being. This concludes the lesson. We trust you found this video informative and engaging. To enroll in the complete course, please use the link provided in the description below. At UExcel, we are committed to your learning journey. Each course offers a certificate of completion, online support, and downloadable resource files to enhance your experience. If you found our content valuable, we invite you to like this video and subscribe to our channel. Thank you for joining us, and we look forward to supporting your continued pursuit of knowledge.